reduction in the stock, so a sudden spike there. Steel Strips is the other one, which is high by 8% as we speak. And Lux Industries, that is one stock that has also seen a surge right now. It's up around 5.5%. So a lot of action that we're seeing in the mid-cap space as well. But one stock that is on our radar right now is Man Infraconstruction. It reported good growth in Q1 FY24. We saw an upside in both profit and revenues, but of course it's a real estate company as well, so we will see an impact on the operations as far as the real estate bookings are concerned as well. The company is also an EPC player, but they are focusing more on the real estate space now. Manan Shah, Managing Director at Man Infraconstruction, is joining us now to discuss the earnings and more. Manan, good afternoon. Thank you so much for joining us. Well, I was looking at the quarterly update as far as bookings are concerned. It is around 150 crore rupees. Last year you did bookings of around 990 crore rupees, almost 1000 crore rupees. So do you think the quarterly numbers that we are seeing right now, you'll not be able to exceed or do the levels that we saw in FY23? What is the target right now for bookings in FY24?
Good afternoon. So the numbers that you're seeing right now of the first quarter is also been promising compared to the last year quarter if you compare it. And the coming quarter's pipeline looks very, very strong because we are coming up with multiple project launches in the upcoming quarters till March, where we've got a project coming up at Tarde, we've got a project coming up at Ghatkopar, and there's another project coming up at Ville Parle. So we are seeing a very strong momentum happening in and continuous sales flow also being there in the market. There's continuous demand also in the real estate sector. So the numbers are definitely promising. We're seeing to sustain basically the numbers definitely for sure, which we had clocked in the last financial year. And this year we definitely intend to even surpass the numbers on the overall annual basis.
So you are expecting more than 1000 crore of sales this year, is that so?
It looks like definitely, because we've got around 4.6 million square feet of upcoming and ongoing projects in the portfolio, so which is on the premium segment, in fact. So we are definitely seeing to surpass 1000 crore in revenue.
Okay. You've been focusing a lot on the real estate segment versus the EPC segment. Currently, the split is 50-50. Say 2 to 3 years down the line, what will it look like? And where are the margins better? Is it EPC or real estate? Can you give us a sense there?
See, definitely the real estate side of the book is going to be much more larger because of the quantum of the industry and the ticket size. So because we've got projects in the luxury segment, each apartments, approximately starting at around 3.5-4 crores. It's definitely going to add on to the top line revenue much more compared to the EPC. But we are not intending to stop EPC at all, that's for sure, because we are still working at the major port projects, and we are intending to do and take up a lot of projects in the EPC side also, where we are eyeing on the future port projects coming in and contributing to the order book. But the real estate side would definitely be more inclined towards, because it's definitely having more margins compared to the EPC, and we would continue towards that.
Right. You had signed an agreement with the Maitri Park project. What's the update out there?
So Maitri Park project, it's under the scenario where there is still some things going on with the existing members, and currently it's status quo. There's no progress as such over there.
So do you think in this quarter or the next you will see some update there? How big is that opportunity?
We are intending to see any update on that. We are intending to complete the final status of whatever regarding the project would be by, of course, in the third quarter of this year.
But why do you think it is in litigation right now?
So the demand basically has been continuously changing by the existing members, and then sometimes there needs to be a full stop to that. So we are still in talking terms with the existing members regarding what the whole situation is, but there's no litigation per se. It's just the ever-increasing demands of the existing members.
Okay, all right. So we'll get an update from you as well on that in the coming quarters. Let's talk about the international exposure that you have, because you do have some residential projects in Florida. What is the sales from the US markets, and just trying to understand what is the idea behind expanding in the US markets? We've been talking about globally real estate sales not doing so well. We've been talking about inflation issues in the US and interest rates hurting as well. What is the expansion plan here? Will you be taking any dollar debt Tell us more about that.
So currently, the major reason why we've expanded over there is we've got uh, uh, projects coming up in Miami, which is in the state of Florida. We've taken around 4 projects up till now, and out of which we are almost on the verge to complete our first project, in fact. And so it's a villa project where we are constructing 2 villas, out of which one is already sold, and the second also we've received strong inquiries for. We honestly do not see a downside in the international exposure. In fact, the margins are also fair and much promising. Where we intend to see the revenue start coming in the next 3 to 4 years of the pipeline, where all of these projects would be launched in the next upcoming 1 year, and the revenues will start coming in next 3 years' time. The reason why we are going over there is I've done a research for nearly around 5 years on the United States, and frequently visited, tried and done the analysis, where the margins are definitely promising, and the timelines to complete the projects is slightly more faster, I would say, compared to India as well. So the global exposure will definitely yield to the consolidated books being more stronger and adding much better revenues alongside India.
That's a first, because a lot of the people believe in the India growth story, and you're the one who's actually saying that there are opportunities outside of India as well, specifically in the US. That'll be also interesting from an investor standpoint, who are, wondering whether one should look at Man as an Indian real estate company, or looking at competition coming in from the US as well. But final question then, what's the current unsold inventory that you have? How much is it valued at? And for all these development plans that you have, will you be taking on some debt on your books?
Currently, the cash flow status, what speaks regarding all the projects, we are highly liquid. At the moment, we do not honestly require any kind of debt at the moment to complete any of these projects. Whatever sales inventory that we've sold suffices for the finishing of the project. Any project that is, occupational certificate where we've received and which is ready, has practically negligible inventory which is unsold. We are almost 100% sold out to 99% sold out in majority of these projects. And we see a strong momentum for all of our projects where the projects are under construction. So even over there, we don't see and we don't intend to take any further debt on any of these projects. There is no requirement per se.
Okay, all right. Manan, thank you so much for joining us and explaining to us what your plans are in the Indian and the US markets as well, and what the split would look like going forward between real estate and the EPC business. We'll slip into a short break. When we come back, we'll put focus on Amber Enterprises. It is buzzing in trade after reporting its Q1 numbers. Stay tuned for that.